Which of the following is least likely a characteristic of a hedge fund? They are constrained to perform relative to a specific benchmark. They strive for absolute returns. They are subjected to limited regulations. Now, hedge funds strive for the absolute returns, and they are not constrained by the fact that they must perform relative to some specific benchmark like exchange traded funds. So they strive for the absolute returns, and they are subjected to limited regulations. However, they are not constrained to perform relative to some specific benchmark. An example of a security or example of a fund which are constrained to perform relative to the specific benchmark is the ETFs, which is a kind of a passive investment where the returns are matched to a benchmark index. However, in case of a hedge fund, they strive only for the absolute returns. So the correct option is option B. Also, in case of hedge funds, the amount that is invested per investor is usually very large, and hence the number of investors participating in a hedge fund is also very low. However, since the hedge funds are subjected to limited regulations, they suffer from lot of data presentation bias like backfiling bias, self-selection bias, survivorship bias, and so on. And all these biases result in the reflection of only the highly performing stocks in the performance presentation of a hedge fund, whereas the poorly performing stocks are removed from the performance presentation, and hence the performance presentation of a hedge fund is highly inflated. So the correct option is option A, because they are not constrained to perform relative to some specific benchmark.